So we finally got September jobs data delayed due to the government shutdown, and Nvidia released earnings and they had an amazing quarter, but there's still lots of volatility that has followed in its share price action. So let's look at the top tech components of the S&P 500, of course, starting with Nvidia and then moving down a few more. We're going to look at price action, market timing, momentum, because I'm here already and that's what I do. So again, the broad market, it's up, it's down. It's still trying to figure out what it wants to do around this support from August 1st and October 10th. So let's look at the individual stocks to get an inside look underneath the hood of the broad market. All right, so my Nvidia forecast to trade up to the 220 area by yesterday, November 19th, obviously did not come to pass. However, notice that we have had the formation of a tradable low one day prior. So this can happen sometimes with forecasts, that the actual impact of that cycle point ends up being the opposite of what was expected. And I dig into how to use that in your trading in my loss forecasting trading system. For now, I'm just going to take this forecast marker off the chart and just focus on what's happening. I'm going to keep this trend line because it was useful to be prepared for the breakout of the most recent consolidation. And now you can see in the after hours, after earnings came out, shares were trading at like 195. Since this morning's open and we're about midday here on Thursday session, it has pulled back. So you might be thinking, oh, well, it went up and now it's down again and it's going to keep going. Well, here's what I'm seeing. I think that what's happening at this very moment is that the expectation for Nvidia to be doing amazing was already baked in, right? So it had that initial pop. And now people are taking profit or kind of regrouping. So still, while this market holds the October 22nd low, it still has room to move higher. Now, there's no guarantee it will hold that low. So I'm going to continue on this theme of how do you monitor the key levels, not all the supports and resistances, okay, but the most key levels, and show you that that's the most helpful context when things look like they're all over the place. Now, for resistance, the November 10th high is definitely the one to watch. If we can get above that, then that would be good news for Nvidia in terms of a resumption higher. So according to sleekcharts.com, Nvidia is about 7.55% of the weight of the S&P 500, and Apple's right behind it at 6.67%. So this stock has been in a trading range, and you'll notice here that the top of the range is labeled in a pretty obvious way, the October 30th first high. However, the low of the range I have identified as this old top from October 21st, because look at how we came back on November 3rd, approached it, but traded higher. However, we didn't make a new high. We came back and we tested that old top 3 times in a row, and the market's still holding. So this is the range I would watch. Now, this doesn't mean you simply buy if it goes above the blue line or sell if it goes below the pink. You want to make sure you have follow through. You want to make sure you have other tools in your tool belt to help you have low risk entries with high profit potential. But at the least, I want to see what Apple does outside of this little triangle, or rather rectangle, before really taking a next move at it. Now for Microsoft, I am looking at a bigger picture here because it's still in the process of retracing the advance from the April 7th low. Now, right now, it's headed towards the June 23rd low, which, based on the current RSI Power Zones action, could provide some short-term support. But it looks more likely that it's going to continue lower, potentially towards the May 23rd low. And again, you want to always be looking at, well, what are my steps ahead? And then what is behind my shoulder that could change the picture? So if this is a quote unquote bearish picture for Microsoft, right? I don't have a crystal ball, it's just what I see at the moment. What might change that bearish outlook is if we get above the November 13th high, okay? So every time you map support, you gotta map resistance because you don't know which way your market's gonna play out. Now, in the case of Amazon, we have a support that's been holding the bull structure from October 17th. Right now, there's not a nearby critical level for resistance. It's actually back up at this high from November 10th. That's the most recent price high, price with a capital P, the way I teach it in my courses and books. And so there's not as much of a downward pressure here with the RSI being in the bull support power zone area. But again, want to see that October 7th low hold and a low potentially form before considering more upside for this stock. Google's interesting because it had a pop with earnings. It's been consolidating. It formed a new platform of support on November 14th, and it's higher, though today's candle is red so far. So there's no new resistance to plot here. I mean, look, it's at all-time new highs, okay? It's just out there. Now, if you decide to bring in more advanced techniques, like I do for forecasting, where you take an individual forecast and you map out what's around it, that's advanced forecasting, then you can have some projected resistance levels, but that's not the same as previous traded history, all right? So right now, there's technically no resistance on Google. However, there's important support from November 14th. We want to see that hold if Google's going to have a chance for further short-term upside. All right, AVGO, Broadcom. Now, this guy is consolidating over the October 10th low and beneath the October 30th high, technically October 29th high. Now, notice how that's also about 25% of the range, the advance from the April 7th low. Didn't we just see the April 7th low on another chart too? Yeah. Now, if you happen to be newer to trading, April 7th and April 2025, the first week, was a big week because that's when the big tariff announcements came out and the market dropped lower on the broad market and individual stocks did too. And then they quickly found a footing and we've been higher off those lows ever since. Doesn't mean we can't get back there someday. I'm just saying it's an important marker in many charts. So don't be surprised to kind of see that theme. So where we are right now, there's just still this sideways. I don't see a clear sign as to whether we're resuming lower or higher yet. But I would definitely watch the high of that range from October 29th and the support from the September 30th low. Rather, the October 10th low. Now, notice how I had to fix myself. That's because sometimes things look lower than they are in the chart or higher than they are. That's why you got to hover your cursor and always see where is the exact low and where's the lowest low in a range or the highest high in a range. Now, Meta is just kind of trailing lower and doesn't look very healthy right now. The bigger picture support that's maintaining a broader uptrend is from April 22nd. Nearby, the important resistance to watch is November 7th. So I think it's going to still head lower while beneath this November 7th high. And along the way, there's support from April 30th. And if it breaks below that, then the April 22nd low or April 21st low is in sight. All right, last but not least, let's look at Tesla. Now, this chart's interesting because we have a recent pullback shaped by the lower high from November 7th. But check this out. It's pushing down, RSI's back in bull support. Where is the support along the way? You might think it's one of these lows back here. But actually, the first big support is the previous top from that giant consolidation we had starting in the late spring. So the April or the May 29th high is the old top that I think would be the most useful support. I wouldn't be surprised, okay, I don't have a crystal ball, but I wouldn't be surprised if shares try to get back towards that May 29th high, old top, and actually form a nice tradable low here, and then Tesla picks up from there. So we got to see how the levels unfold, but I hope this was a helpful lesson, not just on what tech stocks are doing at this very instant, but for you to revisit so that you can look at all the different ways support and resistance unfold, how to best monitor them, and how you can actually use them to be ready for the best possible trade setups per your trading plan and approach. So if you found value in this video, okay, insights to help you in today's markets, lessons to revisit beyond, go ahead and hit that like button, and I'll see you in the next video.